I've helped several small business owners create amazing business plans. But before you can create a good business plan for your small business, you have to be on solid financial footing personally. And so today, I'm going to walk you step by step through a financial planning process so that you can plan your personal finances from now until the day you die. My name is Jeff Schuster with Mechanics and Mindset Business Coaching, and I publish weekly videos for small business owners and entrepreneurs. So if this is you, please like my video below and subscribe to my YouTube channel because I'm going to be publishing a lot of great insight to help you grow your small business and be a success at what you're doing. Now, most business planning processes, they start with things like analyzing your competition, doing a market analysis and doing market research, trying to figure out what your prices should be, trying to see if customers want your product. And I've been a business coach for a very long time, and I've been a business owner for decades. And I can tell you, while those things are important, that is not your first step in creating your business plan for a successful small business. In order to create a solid business plan, you have got to be on solid financial footing for you and your family. You know, it breaks my heart when I see somebody that just got laid off and they've got a stay-at-home spouse, they're in debt up to their eyeballs, they have a few kids at home, and they believe that starting a small business is their way to financial security. You know, the #1 search term for Google for small business owners, especially brand new entrepreneurs, is how can I start a business with no money? So yes, you can start a business with no money, but you can't last long with no money, and you certainly can't create a successful business with a lot of credit card debt and a lot of expenses waiting for you at home. So I'll show you exactly what you can do with your personal financial planning process. I'm going to walk you through a step-by-step personal financial plan that I use for my business owner clients to address and create this vision for their personal financial plan and their life before we ever tackle their business plan. And no, I am not a certified financial planner. I am just a business coach. Now, if you complete this plan for yourself, this personal financial plan for yourself, you're going to be able to plot out and figure out how you're going to fund your life, how you're going to fund the lives of your family members, and anything else that may be coming your way. You're going to figure out how can you afford some vacations or big expenses in the future. I'm telling you, this plan will set this foundation for you so that you can feel comfortable growing your business and investing in your business, or just what career you need to take. If you're not a business owner, you can use this financial plan to figure out what kind of job you need and what that job needs to pay to fund the life of your dreams. Incidentally, the tool that we're going to be using in this personal financial planning process is a spreadsheet that I've developed for my clients, and it's available to you if you want it by just clicking the link in the description below. So let's get started. The first tab of your personal financial plan is just the basic assumptions. You enter your current age, the current calendar year, and then the months until your next birthday. This isn't anything to get your secret identity or anything like that. The spreadsheet just needs this information so that it can figure out what year it is in, and so that it can calculate your annual cash flow for your personal financial plan. Next, you input your current savings amount, whatever you've got in the bank, and this is typically liquid savings or investments that you have, but it's the cash that you would have if you cashed out today, whatever you have in savings. Now, if you have a lot of current credit card debt, you're going to need to subtract that debt from your savings. Now, long-term debt like houses and cars is handled a little bit differently in this plan. The next two numbers are your best guess. The return on savings is the average amount that you believe that your savings is going to grow each year. Conservative savings accounts are earning a ridiculously low 0.2% per year, while healthy investment portfolios are going to conservatively earn about 5% per year. These percentages are after tax. So that means that you may actually earn 6%, but due to taxes make only 5%. Now, inflation, well, you know what? That's a roller coaster ride these days. Conservative estimates are about 1%. Aggressive estimates are about 5%. So something in between is probably advisable. 3% or 2% are pretty good numbers. The next numbers are the tax rates. Now, capital gains tax rate of 25% is somewhat aggressive. It just depends on who occupies Congress these days. So it's been as high as 47% and it's been as low as 20%. Capital gains tax rates are going to apply whenever you sell a house or whenever you try to cash in stocks or things like that in your investments. The income tax rate is your net income tax rate after all of your deductions. So a good average number is between 20% and 30%. Now, wealthy people are going to pay a higher rate, and poor people, well, some of them will pay nothing. Next is your Social Security amount. Yes, it's a lot of detail, and it matters when you start actually taking your Social Security payments. Now, if you're at a loss here, you can guess or you can consult with an insurance agent or another financial planner. Or you can just look on the Social Security Administration site for yourself. Now, death age, I think that's rather obvious. It's when you expect to die. Now, the bottom number is calculated. It's the cash at death. If this is a negative number, you've run out of money somewhere along the way. If it's a positive number, well, you have money left when you die. The next tab is your expense budget tab. This is where you enter your monthly budget. Now, actually, there are 4 budgets. Why? Well, because you have multiple phases of your life that require different expense budgets. So when you're young and you're single and life is cheap and easy, and then when you're married with kids and you have to budget all sorts of expenses to support your family, and then when your kids move out of the house, your expenses drop. Then, when you retire or move into assisted living or require nursing care, your expense budget changes again. You can put literally anything in this expense category you'd like, except for your house payment. We're going to cover that in the next section. The house budget is its own animal because it includes expenses and investments and capital gains all rolled up into one thing, your house. When it comes to housing, you can rent, you can own a few homes, or you can pay for assisted living. Now, if you rent, you only have an expense amount. If your rent is $1,000 per month, well, then put $1,000 in the expenses column in the renting row. When you purchase a home, you complete the value, the debt, the interest rate, the term, and the remaining years on your loan. Do not use the expense column for owning. Your home expenses should be included in your expense budget. You can own a second property that has the same inputs as your primary residence. Now, rental property means that you're earning rent from someone else, in which case you will put the rental income in the income column and the expenses that you plan to maintain the rental unit in the expenses column. Now, assisted living and nursing homes are pure expenses, just like renting. You should complete this form from the current age that you are until the age that you die, unless you have a plan to go homeless at some point. The spreadsheet uses all of these inputs to calculate a total expense and income associated with your housing choices that it's going to be forward to the cash flow tab. Now, the next tab is your income tab. If you plan to be a small business owner, this is the intersection of your business plan and your personal plan. If you happen to be a working stiff, this is where you record your income. If there's going to be multiple income earners in your household, you will combine your incomes to show your household income. There are 2 basic income inputs, salary and windfall. Salary is your gross income from your job. If you're a business owner, you should still have a salary. The windfall column is any income that you plan to earn from equity draws from your business, or inheritance from a rich relative, or the sale of your business, or winning the lottery. Now, most people who use this spreadsheet will gradually increase their salary income each year, and they're going to show one-time windfall income amounts when they expect them to happen. Now the fun tab, the cash flow tab. The cash flow tab is where everything comes together. Your savings or investment balance is shown, and if this amount ever goes negative, this means that you ran out of money. If that amount goes extremely high, it means that you may need to spend more or give to charity. The investment income column is simply the investment balance multiplied by your expected return on investment for your savings. Net earned income is the amount from your income tab less your paid taxes. The housing cost tab is the net income from your housing tab for each year. If you sell a house and then you move into a smaller house, or you start renting, you're going to likely see a high positive number in that year that you do that. Now, if you're paying rent or a mortgage, you're going to see a negative number. Next to the housing costs are living expenses. This column is showing your annual expense budgets based on each household budget that you've completed. The next column are large one-time expenses that are spent outside of your regular expense budget. So you can include whatever you want here. The items that I've included are travel, vehicle expenses. Now, when I talk about vehicle expenses, this is if you buy a vehicle with cash. If you're paying for a vehicle on a monthly basis, I advise that you probably put that monthly vehicle payment in your budgeted expenses instead of here. Then your college for kids, wedding costs, and furniture. Now, these expenses often happen infrequently, and they need to be considered separately from your ongoing household budget. Now, the next income is the total of all of the income and expenses for each row. So if you're spending more than you're earning, this number is going to be negative. Now, if you're earning more than you're spending, this number is going to be positive. Positive net incomes will be added to your investment balance, and negative net incomes or losses are going to be deducted from your investment balances for the next year. Wow, so that was a lot. What does all of this stuff mean? So to ensure that you have solid financial footing in your personal finances, that investment balance number should never go negative. If it's going negative, that means that you're spending too much money or you're not earning enough income. But at least you have the choice while you're planning to figure out what you need to do, either cut expenses or earn more income somewhere along the road. Now, this may sound strange to some of you, but I'm also going to caution you if that investment balance is too high. Now, especially if it's really high by the time you die, because if you have a high investment balance when you die, yes, you can leave an inheritance to your kids, but you could have also spent a lot of time with your kids, maybe doing things, maybe investing that time during life, rather than giving them this big inheritance that they may or may not need by the time that you die. So that's just one other caution. Investment balances that go negative, that's a red flag. Investment balances that are way too high by the time that you die, also a red flag. So the purpose of this financial planning exercise is to really balance your ambition and your desire and your drive to earn money with your desire to live life and spend money. It's always a balancing act. And the way I typically look at it, a typical life in the modern United States is starting out kind of poor, right? Well, unless you have rich parents or something like that. Then you make some money, and then you start a business. Maybe you invest in your savings and you make a lot of money, but then you're paying for a family and vacations or whatever else, and then you're giving to a charity as you prosper, 10% of your income if you're asking me, and then you die with enough money to pay for your funeral and a little bit extra for your kids. When I do this personal financial planning process with my business owner clients, it really gives them some insight on how to set their profit margins for their business, how to set their prices, who they can hire for their business and who they can afford to hire for their business, so that they can spend more time with their family or at home or living the life that they want to live. That's it for my lesson today. I hope that you've learned how to create a good personal financial plan so that you can create a solid business financial plan. And once again, I am not a certified financial planner, but I have helped my clients create some amazing personal and business financial plans. My name is Jeff Schuster with Mechanics and Mindset Business Coaching, and I would love it if you like this video and subscribe to my YouTube channel, because I'm going to be publishing many more videos like this that are helpful for small business owners and entrepreneurs on a weekly basis. And if you would like to learn more about how I coach my small business owner clients, you can visit my website at www.mmbizcoach.com. Now, until we meet again, I pray that God blesses you and your business.